Good morning, afternoon, or evening, whenever you're watching this. It is Sunday, May the 7th, and I'm broadcasting to you from an 88-degree balmy evening over here in the beautiful 7,000 plus islands. And I'm going to go over where we came from, what happened, and where we look like we're going as we're going into the second week of May. And looking over the economic data for next week, we have nothing. Absolutely nothing. We have CPI on Wednesday morning, and that is it. Now, obviously, this will get updated as the week starts to get closer to a start and as it progresses with Fed speakers. We've got the Bank of England doing their rate increase this week, and not that, but over here. So again, we started the week at the month 41.66.79, ended it on that magical 41.36, down 30 points for the week. So we got a red week, much better than that fake red week that we had during that streak of 7 over there at 365 as far as what we were down. Got a new high, 41.86.92, just a couple of points below that FOMC high from February 1st. And the range for last week, 138.64, which literally was those 4 days, was greater than the entire range of the month of April. I never, ever want to recap April, but a side statistic, just something to be aware of. 3 Green Fridays. 1, 2, 3. 3 Green Fridays. We have had longer streaks of Fridays. We had 3 Fridays in a row here back going end of March into the beginning of April. We had a much larger streak in January where it was 1, 2, 3, 4 Green Fridays. So, not something that you stick there and you bet on as hard as we bet on that Monday, Tuesday, Wednesday, Thursday red closes, but it is something that you want to be aware of. And as we look over and head over to the spreads did good this week. Trade of the week, 4,200, 41.95s, 75%. A little bit better for those that waited out, but from the time of being posted, 75%. The big trade of the week was that FOMC trade that we put out, which I'll go over, 400% full credit. 400%. Had some good trades during the week, and then Friday with Apple's run, which I'll go over. This is why I don't like putting out trades on Fridays, because you've had a great week. There's absolutely no reason to go and try and force everything onto a Friday. Fridays are meant to look forward into next week, not to sit there and fuck up your weekend. That's the way it's supposed to be. And moving forward, I will go back to my old system of not posting any alerts to be traded for on Friday and instead looking out to the week ahead. So as we started the week, JP Morgan, 146, 145 spread, and got that pop right there after the open on Monday. Ended the week down at 136.62, so very, very obvious. 32 cents on a little bit more than $2 risk. Do your math. Lululemon, again, one of those ones that started out early in the week. I was looking at the 395, 392, 50 calls at 40 cents. And yeah, it went all the way up to 389. It never threatened the 392.50, even though it was a non-mover to the upside. Maybe you could have got a little better than 40 cents over on Wednesday, but again, at the end of the day, 40 cents on 210. Do your math. Fuckbook broke 236.21. Fuckbook dropped down into that earnings gap. Still got a lot of gap to get filled. Those May 1, 242, 240 call spreads, 110. Elongate got them at 150. $1.50 on a dollar risk. Ain't hard to do the math on that. Closing down there at 232. Great trade. And for you guys that had the 240 puts. 240 puts were absolute money this week. So I move on to SPX. And we started the week on Monday. Monday, where we posted that high at 41.86.92, and around 10 o'clock in the morning, I shared it out there. Safest trade I can find you is 4,200, 41.95. Want to go higher? Go higher. It's at 80 cents. You very obviously got better than 80 cents as you went in here to 12 o'clock. 80 cents pays you your money. Come over here on to Tuesday, May 2nd for the risk takers, non-gender bias. 4105, 4100 puts $1.50 bid, obviously, at 10:24 in the morning, right around here. You got in there, you got a little bit deep, you got even a little bit more better credit, which 3 of you took advantage of the Slack chat room and messaged me on it. And very obviously, you took advantage of it with that close up here at 41.19. Go into FOMC Wednesday, and starting in the beginning of the week over on Monday, I had posted this in your weekend email. And in the weekend email, I was obviously saying looking for 4140, 4135s. Tony updated me on Monday and said, hey, you're getting $4. $4 credit on $1 risk. As you went into that dip here on Tuesday, I was saying, hey guys, your $1 risk is getting $3 credit. If you want to take it off, go ahead. Ride it through the FOMC meeting, obviously closing at 40.90. No threat whatsoever to the 4140, 4135s, even though you could have played these during that FOMC question and answer period with Jerome Powell. Could have played that and played it and played it and played it, and obviously a much deeper close. We didn't get the 88 points to the downside on FOMC day that we had previously gotten as the smallest FOMC day. And at 40.88, again, looking at the May 12 SPY 411 puts in the email as well. Could have got them all day long on Monday for $2, spiked to 865, and obviously with that move on Friday, I mean, let's just be fucking frank about what happened there on Friday. We knew it was going to be green. We knew it was going to be green. So we come back here again on to May the 4th. Be with you. I think that's cool, but then again, you got to be a Star Wars freak. May 4th, the Iron Condor, 4140, 4135, 4055, 4050. Closed at 4060. Was a little bit of a risk, but yep, it was a little stressful there at the end. Paid you off. Same thing over here. Pre-market alerts, both of these, 4050, 4055s, closing at 4060. Few people messaged me in the middle of the day and here early in the morning about whether or not they still looked good. I was obviously very confident on it, and we got what we got. So going into Friday, this being Thursday, May 4th, I shared this in the spread room talking about how we had been red Monday, Tuesday, Wednesday, Thursday, closing red. Since the 2009 bottom, happened in 2018 at the bottom when we finished the entire sell-off. It happened at the very start of that 2018 drop. October 1, October 5. We had posted our high back in September. That was a very unique and very aggressive getting short area for those that was with us in 2018. 2017 it happened, 2012 it happened, 2011, 2011, 2012. So that's why I was saying it's very rare that you're going to get a trade like that shows up on your doorstep and says, hey, would you like some free money? Yes. Okay, take this trade then. And that's why I posted there. The risk of the overnight bullish spread, what we're looking for, based on not seeing a, Monday through Friday close all the way down, being that 40.59, 40.61 was where we actually closed. Buy the 40.50s, sell the 40.55s, $2. Very obvious. These ended the day full credit as we went right to that 41.36. So then here was Apple. And Apple I posted out there on Wednesday at 9:46 in the morning as we were getting our spike up there into the FOMC, which again spiked with the FOMC before that big sell down. 95 cents credit at the time. Only 2 people told me they got $1. Dropped down here, and I remember looking on Wednesday and seeing it somewhere, it closed on Wednesday at like 44 cents or something like that. So again, risky always going into any kind of an earnings play. Thursday, got our rebound. And obviously here on Friday with that move up to my 173.88 pivot, which is what I was using for the spread. Look at willing to roll if needed to May the 12th. 173 overnight, wound up closing 173.57. So obviously these were $1.07 in the money. So if you got 95 cents or you got $1, you either took the $12, $7 loss, or you rolled it over and went into next week, which we are still pretty confident with. So again, the May 5 trade of the week, as we were looking at there in the beginning of the week, 4,200, 4190 calls, 210, subject to higher credit than current with the FOMC spike due on Wednesday. Why am I chewing my tongue? I have no idea. Maybe because I haven't eaten today. And $2 was the bare minimum anybody would have gotten taking it on Monday. I believe it did go to 250, but I had other things to do rather than just track this one trade. So bring it over here onto the charts and let's go through where we're at. Because again, I'm looking here at a 5-day. And in fact, I will move it out to a 10-day. Just so that we can see everything that we're talking about. 4186. We had that move to the downside. We were looking as our A into Tuesday. We had our move up to the FOMC, which we were looking at as our B going into Wednesday. We had that 41.51 plotted. We didn't get it on FOMC day. Rather, we got our gap down on Thursday, and then it perfectly came right to 40.51 and danced on it and danced on it. And you can cue whatever, Lionel Richie dancing on the ceiling. And as you got your bounce that we were talking about, boom, boom, going here. If you're going to do a Fibonacci drawing off of that, you can see a 1-2, your big gap up there on Friday. Nice looking 3 right above the 200 extension. Very shallow 4, very shallow 4. That little break below 41.15 should have rolled over there on Friday, but they had other plans, and you had your big shove right up there above the 261, up there to 2% on the day, right up to the FOMC highs of 41.4830, missing it by $1, and then coming back to our magic 41.36. 41.36.25 to close, 41.36.15 is that magic line. So everything is still in the NASDAQ, okay? It's all inside of the NASDAQ. And here on the NDX, I'm just literally looking here at the gaps that are there to be filled. You got 1, 2, 3, 4, and then a fifth one down here from back in March. I'm not going to count that one back in March. Just literally looking at these ones here from that move up at the very end of March into where we're at. We do have a gap up above, which is the last gap left from back in August. Fractional gap, but you can look at this and pretty cleanly see you've got a very clean ABC in progress here, coming off of the lows over here in January, which basically is a double bottom going to October. And you come over here onto the QQQ, and the same thing with the QQQ, how we were looking for our drop. We got our drop. Boom, nice little 5 waves over here for a 3, and then your big drop over here to end it right at the 200 extension, missing it by 30 or 40 cents. Then we were looking for our upside, which again, we were targeting. Here you go, and you came right up to your 250 extension, just missing it. With this big move that we have over here from Friday, which as you can see, you have 1, you have 2, you have 3. 3 gaps left below going back to last week, Wednesday. Only on the QQQ. You have 4 over on the NDX. No, sorry, you have 3 on the NDX just as you have on the QQQ, because over on the NDX, you're also looking at what you've got going on there from back in the beginning of March. So, all right, let's say this is bullish, okay? And looking here, we're looking at where our full moons are, right? We see our full moons, okay? Friday was our full moon. So let's go ahead and say that we're bullish. Let's call this our 1. All right, let's draw it. Let's call this our 1. Call this our 2. Or sorry, I'm sorry, I'm going backwards. Going backwards. This is our 1. This is our 2. All right, get that out of the way. So as you can see here, you've got a very clean triple bottom going back to the October lows over here, October low again, and then here your December low and your January low, right there onto the September 2020 lows. So let's call that a 1-2. So we'll zoom it on out a little bit more. And what this is trying to tell us is that the QQQ is going to go no less than 339. That's what it's trying to tell us. It's trying to inform us that from here at 322, 323, we've still got another 15, 16 points to the upside for a minimum to show this as a bullish third wave. Cannot be shorter than wave one. Wave three has to be the longest wave. And then when you start coming out here and you're seeing where we're at, and we start moving these a little bit more and extending them, don't do that, do this. And continue to extending as we're coming over here off of the little bounce high over here into the November high, the December high, crushing through that January high right over here into the March high, April highs, and where we're at. And again, looking at this much wider wedge, shove, wedge, stall period here, I kind of got to zoom myself out and start looking at, okay, so we run 20% on the QQQ into January. Then we drop 9% into March. Perfectly done? Perfectly done. Then we run 13% to the upside. Then we only have a less than 4% dip. And we're up here banging on this 20% from the all-time highs bear market line with that one gap left. Very questionable. Very, very questionable. So what I've got to do is I've got to come back and zoom myself out a little bit. All right, so I'm looking at the SPX and I'm looking at the daily, and I'm seeing over here very clear that the RSI has you've got a running sell divergence on your daily RSI. We repaired it very nicely because we got oversold on those four days down last week, repaired it and brought it back up here to around 56.60. The money flow has been complete shit. The wider money flow has been even worse complete shit. But yet here we are. The money flow being that there's not people buying this. So again, with that 4,200, 4,100 level, and you can see how you got your resistance all the way since we had that February low, your big March high, your drop down here into the June lows, then your bounce and your fake out, or in the May lows, fake out, June lows. Again, we've been bullish since October, but what we're looking for here is a healthy dip to the downside so that we can get aggressively long to get that move up into the 4,300, 4,400s. Is this full moon going to be the one? Let's see. Here we are over on the NASDAQ. Again, with the NASDAQ, no problem over here. However, that one little dip that took us down to that minus 4% oversold the daily. You remember going back 2 weeks ago, I was screaming, we are oversold, we are oversold. And we got that massive move to the upside. Here we are with a clear running sell divergence. Very weak, but it's there. Money flow, complete shit. Wider view money flow, absolute shit. And people come over here and look at chart patterns and start talking about different things. And, fair play, because chart patterns, I'm not one of those guys. But here's your 400-day moving average. And as you can see, we're making a lot of contact with the 400-day moving average. We've got this 13,000, 12,500 area or 12,700, 300-point range that we're faking above it, but we're holding that 13,000 and we're not breaking below that 12,700. So very clear problems that we're going to be working with on that. So here we are over onto the NASDAQ weekly. And with the weekly, as you can see, overbought. We are very cleanly overbought into that overbought warning area. Not as overbought as we were when we had that spike up run at the beginning of the year. But again, it's one of those things that you can look at from a wider point of view and try and talk yourself into it being a bearish running sell divergence on the RSI. But you come over here onto the money flow, you can see money flow's weak. It's just there. It's not there. There's no sellers. It's just hanging. Same thing over here with your wider view money flow. It's just hanging there. Nothing going but just sideways for the moment. And then we come over onto the SPX. And the SPX, again, on the weekly, overbought on the weekly as we peaked up here earlier in the week. overbought over here when we went into the FOMC meeting, overbought over here when we went into our August highs. And as clearly it was a different world back in 2021 than it was in 2022. But again, we have that warning over here being overbought, money flow being complete shit, money flow still being complete shit, and we are just hanging into this area here between that 4,200, 4,100 area, not getting any progress out of it whatsoever. So as we move into this week and widening out with the view, with this being our A and this being our B, we will see after having 7 green weeks in a row, with that one only being down 4 points, so I'm calling it green. 7 green weeks in a row. I would look for this to be an AB and then the C wave to the downside, where somewhere between that 4,008 and 3,975 gap fill from way back here at the end of March should be all that we get and all that is needed in order to go and clean up those wider time frame charts of the daily, give us a nice oversold / buy divergence, do the same thing over there on the QQQ, and bring us into a buy center where we can get something over here on the QQQ in this area, somewhere below this 309, above this 296. And then we can look at a more aggressive approach as we head into the summer, as we head into September, as we head into October. But that's what I've got for you for now. And one thing I will leave you with here is I'm new to this, okay? I'm new to this. This is a commitment of traders, and I'm new to this. I'm new. And I'm learning around here. You can go onto Investopedia, you can go onto a bunch of different places, you can read about what it is. What is the commitment of traders report? There's a lot of pros, there's a lot of cons. But where I'm literally just watching what I was told when it was introduced to me a few weeks ago, which is the red line, which is your commercial merchants, and your green line, which are your non-commercial, your larger speculators. And we're just looking at the commitment of traders report. And I'm looking back here and saying, like, okay, over here in June, this was a huge divergence between the two. One of them was really optimistic and one of them was really pessimistic. And then I come over and I look at the June chart, and that's right there where we were, where we spiked up to that 32, 33, and then we got an 8% decline really quick over here into June. And I didn't look back to see what it was over there in June, but literally we're 3 months off of the COVID bottom. We're 50 points, 80 points from the COVID top. So that was a big move to the upside. But yeah, looking back at that, and I'm seeing that big divergence here in June. And then I come over and I'm looking at different ones. Like here's one in June, here's another one in September. But it gets really, really wide when we start coming over here into 2022 in August and over here in September, where these guys, the red and the green here, extremely wide from one another. And then you come over here and you see your August high, then you had your little dip, and then your bounce, and then the CPI report, and then that big sell-off, and then the FOMC meeting, and then kaboom, we went into the October lows. So it's not something, again, that I'm basing any kind of judgment on, or really, because I'm still learning what this is all about. But coming over here into the end of the week, or what comes in the middle of last week, and seeing this massive divergence between the two, and then coming over here on the commitment of traders, financial traders, and seeing how you're starting to get the dealers going a little bit short with the red line over here. They've been doing it since pretty much the end of March. Much less commitment to that upside level. I'm a little bit sketchy in thinking that we are not going to get a proper full moon like we didn't get over here in March or April, where we just kind of chopped around. And our full moon this time, having gotten to where we are, is actually going to produce ourselves something better than a 5 to possibly 8% downside, where we can get a nice oversold and then get a move to the upside. So I will leave you with what I left you with over there on the weekend, and that is what I am looking at as the May 12th trade of the week. Trade of the week, I'm being 4105, 4100. That's me. $3. But as I mentioned in the chat room, as we went into the day and we started grinding up above that 4115 area, you could go to 4130, 4140, 4135. You're getting 100%, 250. You go to 4160, 4155. You go to 4180, 4175. Hell, you could go to 4200, 4195. You're still getting $1. That's a 25% return. Maybe if you're doing one or two contracts, it's like, eh. But the guys, not guys and gals that I know in the room that are doing 100, 200 contracts, that dollar right there is some big fucking money. So we got a very slow week that is ahead of us as far as action. There's no news. There's CPI. Apple, obviously, after this Berkshire Hathaway, we should expect Apple to not sell down, but just kind of contain in that area. And then as we go in, which I'll pull up Apple right now, looking at the same time frame here, we got our big move off 124 right up here to that 173.88. And oh my, what is that? What is that? What is that 174.90? That's the August high and the gap fill that was left under the August high. So, coming on to Apple and seeing how we've been over here for the course of the year, I would not expect Apple to fill this gap, but I would be looking for Apple to resist in this area with the 2022 open right up at 178. So I will produce another Apple trade as we head into the beginning of the week on Monday. So have a great Sunday. Enjoy your weekend. Go out, get some fresh air, and I will see you in the chat room on Monday.